Africa Development Bank predicts East Africa will maintain its lead in Africa's growth story, with projected rates of 5.1% in 2024 and 5.7% in 2025. Join Dr. Donald Kaberuka from Southbridge, Isa Toursar from AFDB Rwanda in a panel discussion about East Africa's investment climate amidst debt, conflicts, and climate change, moderated by Banji Fehintola from Africa Finance Corporation. Explore these challenges alongside the opportunities of a unified African market under the AfCFTA.
I just want to start by maybe tapping Dr. Kaberuka's brain on where we are. What's the state of play today in Africa?
Africa is a mosaic of 55 countries. We are the same, but we're different. So when you ask me why in Africa to put your money, maybe because of my background, I never like to look at our countries individually as such. I think we're one market. There are barriers between our countries, but we're one market. I would encourage investors to look at our market as one. This is why I said your generation has got a huge responsibility to return the East African community to what it was in 1976. It was not a free trade area. It was, at some point, even a monetary union. So that's my first point. Second point is that, 60% of all Africans live in about, I would say, 7 countries. Those with big demographic densities. The like of Nigeria, Egypt, Ethiopia, soon Tanzania, and a few others. What happens in those 6 countries is extremely important for the neighborhood. Nigeria alone is 60% of ECOWAS economy. South Africa the same. So it's important that in those countries we get it right, not because of the people in the countries, because it has a huge multiplier effect on the neighborhood. And some of them, to be honest, of late have been struggling, either for domestic shocks or external shocks. Now, you can get it right in Cape Verde, but Cape Verde is a very small country. You can get it right in Mauritius, but it's a very small country. So it's very important to do that. That said, what happens in smaller countries is important because it serves as an example of what can happen. Many people come here to Rwanda and see things which are happening here, and they say, oh, well, wait a minute. Actually, this means it can be done. So combine what happens in the big densities and the exemplar effects of what happens in smaller countries. Now, my last point on the macro is this. And again, I'm happy the minister is here. We have a unique problem we have not had since 1972 in Africa across, on the macroeconomic side. Now, in 1972, something unique happened. Again, there's nobody here who was born in 72. So I may have to explain a bit what happened. Between World War II, between 1945, 1945, end of World War, there was only 2 countries in the world who had surpluses. One was the United States, for obvious reasons. The other one I will wait for another day. All other countries were bankrupt. Only the US had surpluses. All other countries were in deficit. And so the global economy ran basically on deficit countries recycling surpluses from the United States on the basis of the dollar. So Germany was in deficit, Japan was in deficit, destroyed most of Europe. Okay? Then the famous Marshall Plan, which then recycled US surpluses. Now, by 1972, the United States had gone into deficit. The countries which previously were in deficit were now in surplus. Germany had huge surpluses, Japan huge surpluses. Most of Europe had recovered. So now the opposite began. The dollar was now serving the purpose of recycling European and Japanese surpluses, and later Chinese surpluses, up to now. Now, what happened, having a reserve currency is a huge benefit. The United States decided to end the convertibility of the dollar, effectively devaluing the dollar. All right? And the end of the fixed exchange rate regime. Now, what happened then, the rich countries go together because they had a second problem in 1973. That was the oil embargo. Oil prices went from $2 to $12. People here young may think $2, was it true? Yes, oil was $2 in those days per barrel. It went from $2 to $12. Now, imagine for a country, a small country in Africa, for the oil bill to go up suddenly from $2 to $12 for its balance of payments. And many of the African countries began the journey into decline because of this energy shock and currency shock.
What has happened in recent time has been, unfortunately, again, issues around defaults coming out of the continent. And, so I just want to know, from your view as a bank, African Development Bank has a view of the entire continent.
After what Dr. Kaberuka has said, I think for a bank standpoint, being an NDB on the continent, the first on the continent, the continent need long-term and affordable financing. Unfortunately, as he says, this is not happening because our risk profile has increased and we are borrowing at a very high premium, and with a shrinking fiscal space, it makes the work of Minister of Finance and countries very, very difficult. And I think that, as he said also, it's only in the reform of the global finance architecture that will find the solutions. Countries are doing their level best, Rwanda among them, to consolidate the fiscal space, to better manage the debt, right? For instance, Rwanda moved from a low debt profile before COVID to the medium debt profile, which means that borrowing is also more expensive and management of the debt has to be on a daily basis, but it's not sufficient. And I think that the finance needs to come at the scale and at the cost that we can afford, and this is a reform that goes beyond our countries. In terms of capacity, the bank provides a lot of capacity building to government, in different forms, to able to manage the debt. But I think that it also goes beyond the bank as one of the key players on the continent.
I would just want your view on is, what do you think is the trigger for what is happening? Is this the new norm? Is this what we're going to see going forward? And how important governance would be for Africa to realize its potential?
So a lot of debt in Africa is created by this inequitable access to capital markets, all right, which then generates into macroeconomic imbalances. So I think we have a problem here. And I think it was President Ruto and President Akufo-Addo, I don't recall well, who are really explaining this point. We need to get to a point of a conversation on this international debt architecture and resolution. Number two, there is a lot of discussion about Africa is becoming indebted again. But I tell you, at this, under the control of the minister here, if you look at the debt of Rwanda, it's about a year since I looked at it. I think more than 3/4 of it is owed to international financial institutions. All right? Rwanda has been a very responsible borrower from the capital markets. Not because they don't want to, because they want to be extremely careful. They've been borrowing from the like of the African Development Bank, the World Bank, and others. But the problem is, if you borrow money, for example, from the International Monetary Fund, people tend to think it is cheap money. No, it isn't. All right? It is short-term, first of all. Minister, please correct me if I'm wrong. I think it's about 5 years. All right? You have to repay it. So a lot of our countries, during this COVID crisis, received a lot of support from the International Monetary Fund, but it's short-term money. and compared to what could be obtained, say, from long-term financing of the like of IBRD, is quite onerous. So there's another thing we have to deal with. So that we have to deal with the Africa debt from the viewpoint of what we have to do in terms of debt governance, in terms of, looking at things we do in our own countries, but also reforming the international system. That is where the crux of the debt is. I don't buy the argument that somehow African countries have mismanaged their debt. There are about 4 or 5 countries I can think of. It's the same point I can make about Rwanda. Because Rwanda in 30 years has come quite a long way. And there are many factors which I'm sure the minister can explain. But the issue of stability and predictability of policies is extremely important for investors. Vietnam was at war from 1950 to 1975. As I mentioned to you, by 1994, GDP was only $15 billion. Now it is $500 billion. Explanation, human capital formation, again, plus other things. But stability of that country has been a major factor. And so if in those parts of Africa where I've got instability, where I've got recurrent issues at every election, you have at once instability, lack of predictability, all right? And therefore, all that investors factor it in. So let me pick the case of one country, which right now is going through an enormous challenge, the Sudan. When I was still at the African Development Bank, we were trying to deal with the debt of the Sudan. The stock at the time was about $70 billion, I think. All right? And they'd gone the wrong way to try and do something about it. Right now, I don't think that debt restructuring will be possible. So it is not simple about the instability and the political dynamic. It circles back to the economics and to the lives of the people.
I'll move from that to talk about, the issue of risk premium, which you kind of alluded to, this perception of risk and all that, and the reality of risk on the continent. I see that as a treasurer who goes around the world trying to raise money, how much we have to pay as a risk premium. In fact, there's a name for it. It's called the zip code premium. Once you just mention Africa, there's a premium to be paid as far as global investors are concerned. It's the reality is what we have to live with. But I want to move from that to the view, your view, as you see it on the continent. This issue of risk premium. Is this, if this room was filled with non-Africans, what would you tell them in terms of the risk profile?
Okay. Maybe before coming to the risk profile of the continent, just to supplement on the politics and governance. I'm coming from that part of the continent where we have some turmoil, unfortunately, and you could see that it's because of the lack of governance, accountability, transparency, rule of law, etc. And definitely you cannot attract any financing in that context. And it's not a given, because my second country, which was at the bridge of falling to that category of countries of coups, to name Senegal, for the past 3 years, a lot of loss of gains in terms of governance. And unfortunately, we had a happy hand last week. But just to say, in 3 years, almost no investment was made in Senegal because of the political situation. So coming to what I would say to those ones is really to look at the continent with more fairness and open-minded, right? Because when we work with our countries, it requires also, in addition to what Doctor has said, some empathy and fairness. And we have not been treated fairly, because only few countries are at the bridge of being a default. And I think also if in the assessment of the profile, the resources and the being natural resources, being the capacities, being the financial, was also factored into the risk profile. And I think that our risk profile is too narrow, right? To be able to assess the worth of the continent. And I think we are the continent of the future. Given under some circumstances, we can make it happen. But I think that we also need to be treated the same way that other countries, irrespective of, the governance, because it's also not on the entire 55 countries that we have those issues. And if you take the case of Rwanda, for instance, low human capital. This is the reality. Not the same endowment with minerals, natural resources, but they are making it happen, right? So I think that those examples should also tell the world that it's possible under certain circumstances, under certain conditions. This is what I wanted to add.
So the Continental Free Trade Agreement is ambitious. You've mentioned it. You've tasked this generation to make sure that it happens. What are the barriers that we need to be aware of, and how do we overcome them, Dr. Kaberuka?
The country you know is Germany today. For a long time was a collection of states, each with its own currency, rules, regulations, and so on. There were quite a dozen of them, or that I think. I can't recall. Along the way, I don't want to complicate history, they came together as Germany. And today it is the most powerful country economically in the whole of Europe. Look at all the big economic spaces in the world today, from India to China and all this. So there's something about market size, but not simply about market size. It's also about market diversity. So this free trade area is not simply about trading. It's about trading and investment and opportunities for people. Opportunities for a young Rwandan to go to work wherever they want to work. An opportunity for a Nigerian to come here and set up business. So I think give the free trade area a bigger meaning than simply exchange of goods and services. It's about the diversity opportunities for the billions of people you always talk about in these conferences. Now, the reason I say to these young people here, you really have the task. Because the problem with these arrangements is that they often move at the speed of the slowest. Now, I want to put it to you that as you can see in Europe, not all the European countries are in the Schengen arrangement. Not all of them are in the Euro arrangements. Some are in the European Union, but they're not in Schengen. Others are not in the Euro. Others, like the UK, have even left. So I think we should not be stuck at the speed of the slowest as we move toward the objective of the CFTA. You know, your country, when the CFTA was launched, was quite hesitant to sign the CFTA. Not because of your fault, but because the political economy in your country created some tensions around, wait a minute, will this open up opportunities for Benin, your wonderful neighbor, to import goods, relabel them as made in Benin? And it took some time to reassure people that, look, if it is about anti-dumping registration, it's about rules of origin, dispute resolution, we can all work on it. But let us agree on the principle that we need a bigger, more diverse market. So what I'm urging you today is, why not move at the speed of the fastest? Even if those who want to go faster are fewer.
We also have our developmental challenges as a continent. So maybe the last comment I want from my panelists would be comments around how do we balance the climate commitments and Africa's need for development and industrialization. You know, that's, to me, will be if that's the last message we'll take out of this panel, I would just like to hear the two comments. I'll give you the last word, sir. Maybe quick one, then Dr. Kaberuka will close the panel with his thoughts on that.
Thank you, Banji. And I think that to start with 3 points quickly. The first one is our development, despite climate change, is not negotiable. And I think that we need to get that clear. And countries like Angola or Nigeria or South Africa shouldn't be blamed because they are using high carbon intensive pathway, and they should be supported to utilize, to transition to a greener, but shouldn't be blamed. And to transition, it doesn't happen overnight. It's a process which requires skills, technology transfer, flows of money, etc. This is first. Second message is we are, as a continent, have a lot on renewable energy, and which allows us for low carbon development pathway, using all these green solars and wind, etc. But we need to be incentivized as a country, as a continent, sorry, because to be honest, we are not responsible for the issue in the first place. I remember in Copenhagen 15 years ago and Durban later, African countries were not putting a penny on adaptation or mitigation because this is not our responsibility. And here we are 15 years down the line, they are borrowing for it, right? And they are struggling to be able to cope, and they are doing it on their own money. So I think that using those renewable energy should be intensified with, again, energy transfer, again, flows of money, because it's a global benefit. It's not only for the continent, it goes beyond the continent. Third and last point, and this is more for the African countries now, is really infrastructures, as we know, for AFC, FTA, or anything is important for our transformation. Right? It's very costly, we don't have the resources, and it's even more costly if we mainstream climate. But the thing is, I'm glad this is a conversation I'm having with Minister Uziel all the time. Rwanda, for instance, invests massively in infrastructure, right? And when you had a flood last year, you know, all of a sudden you have to to increase your budget by 800 million to be able to cover for the losses, especially in transport. So really, it's high time that when we invest in those infrastructure, not only to take care of climate, but also to have a bigger development impact. The entry point could be access to road or access to energy, but how does it impact agriculture, energy, or health, or, you know, so that you have a bigger return on investment on any dollar that is spent on our development. Thank you.
Thank you. And Dr. Kaberuka, so this is a climate generation.
This is a climate change generation.
It's a climate generation, so let's talk to them.
Yeah. That's true. So I would agree with what my colleague just said, 100%. Look, we know the issues you know to do. It's about three things. It's about climate finance, it's about climate justice, and opportunities in the green economy. So our climate finance, there has been a promise since almost 30 years to provide $100 billion a year for adaptation and to some degree mitigation for African countries. It has been very disappointing. So that is the first challenge. We know what to do. All these countries have adaptation plans, but finance has not been coming about. And one of the proposals which have been made, which could have been able to raise the money, was the tax on carbon. Even assuming a low price of $24 per ton of carbon. But it has not been possible. So I think the challenge of this generation is to ensure that the promises made on climate finance are realized. The second is climate justice on transition. As the countries transit from a high carbon economy to a low carbon economy, the speed, the direction should be one which is just reflecting what she said about who has greater responsibilities, what we call same but differentiated responsibility, something like that. Common but differentiated. So climate justice. But then the third one, and this is important for this generation, even with these injustices and lack of finance, it is obvious to me that the future you will be living in, and those who come from you, will be a future where opportunities, enormous opportunities, will be created in the green economy. Remember that the first industrial revolution, in the like of the UK and others, was on the basis of oil. So good for them, the industry was on the basis of oil. On coal, excuse me, coal. The second industrial revolution, led by the US, was on the basis of oil. There was still coal. When I was a student in the UK, there was coal mines in Yorkshire. Now, it is obvious to all of us that the future industrial path will be a green one. And there will be a lot of opportunities for the youngsters at the time. So we need to prepare for that economy as well, okay? Even with the injustice of the current one. So climate finance, climate justice, and preparing for the future in the green economy, because there are the millions of jobs you need, will it be, whether it is green infrastructure, green jobs, whether it is how we do agriculture, how we do water management, and so on.